Good morning, everyone. Welcome to our Monday morning trading room. 1 second here, we'll get the screen share going on. All right. Okay, so here's the NASDAQ. And a little bit of a bullish start here to the day. Friday session kind of fell flat as we anticipated after that early rally. The market just kind of kept going sideways. The pre-market here, a little bit bullish, and certainly to start the day, it seems as though the market is a little bit bullish. So far the buyers perhaps a little bit stronger, but we are left with a bit of a gap to the downside. So we'll see what they do with that. For those of you who like your first in-sync signal of the day, I guess we're still waiting on it. We did get an eagle signal here pre-market. What time did that one develop? Oh, that one developed a full hour before. So far, no in-sync signal either on the eagle or the raptor. They're stalling here a little bit now. Monday mornings, they're normally very active because, of course, the markets have been closed for a few days. If there was any significant news, then the market should be reacting to that. But it is still summertime, not the last week of summer, but the last week before the kids go back to school. So the markets, I don't know, the market participation might be a little bit thin still as families try to sneak in their last chance for some time away. Got a red bar buy now here in the Hawk Micro Scalper. And this is the type of signal that we can short. We had that little island of selling go through the Geiger counter. So this is the type of signal. It is a with trend signal, but it's also an early warning that perhaps the trend might be ending, in which case you could set up to sell a failure of it, and that would look something like this. Of course, you can always use it, like I said, as an early warning that the trend may be ending, in which case we can be on the lookout for a first micro macro cross to sell. And that should have some follow through to it. So a couple of options for those of you looking to perhaps take an early trade. The Falcon now also working a possible trend change signal. And the Raptor looks like it's going to give us a number 2 signal as we've retested the high here, and now it's perhaps going to come in with a sell signal. The Geiger counter is fairly bearish, so you know what? I am going to go back here and I'm going to look at this failure of the red bar buy as a possible short. Oh, I was going to try to pull my profit target a little bit, but the market just moved so fast to the short side, it didn't give me a chance to move that profit target. Oh, that's all right. It was still a decent trade. And now we're getting the first micro macro cross lower here in the Hawk scalper. Let's see, did we get that number 2 signal? We most certainly did. There's that number 2 signal on the Raptor that we were anticipating. And of course, the target for that signal will be the hard edge of the trading band. So the seller is pushing back. And now that we are into the hard edge, we're going to anticipate some sort of reaction here. Great question here from Rick. Rick asks, good morning, Eric. Could you please define the criteria for a quality signal in the Raptor, aside from A, avoiding sideways markets, and B, avoiding conflicting colored bars? Okay. First off, let me start with the B comment. I'm not so concerned about the colored bars, because when a market changes direction, there's going to be bars and filters, and everything's going to be out of sync anyways. Finding a quality signal, well, obviously we're going to be focusing on our high probability signals. So here we are now, we're in the hard edge, right? So we're anticipating a reaction here. So what I'm going to look for is I'm going to look for the market to give me some sort of indication that, in fact, the buyers are in control. Before this market truly changes direction, I know it has to retest the high. So now I'm going to look at this scenario and I'm going to say, okay, how much room do I have up here? Do I have enough room that if I'm wrong about the trade, I can do something about it? And I think I do. I think I have enough room here that if I set up this trade and the market goes sideways on me, I should be able to do something with my stops. Okay, so that's kind of criteria number one. Do I have the potential to profit on this trade? Well, the potential to profit's always there, but do I have the ability to adjust my trade if something goes sideways? The other thing I suppose I look at is where am I going to have to place my stops to make this a reasonable looking trade? In the case of the downtrend here that we just saw in this little reverse, we saw, and I'm not usually one to take an early signal, but this one looked favorable because we had a market that was sideways. Then we had a market that broke out. The market came back and tried to retest the breakout, right? If we draw the break or the sideways trading range, something like this, they came back, they retested the breakout, they tried to continue higher, but they couldn't. And so they gave us the number 2 signal. Counter trend trades, as I mentioned before, are always going to be a little bit of a crapshoot. But here too, if you can set up the trade and afford the risk, then it's very often worth a try, especially when the band starts to get very broad. Okay, so here I see we have a crossover buy forming. So it's the same situation. Can I afford the trade first off? Yes. Okay, I can afford the trade. Do I have room here to do something with my trade if the market doesn't work out? Yes, because my profit target is still shy of the high. So let me put that in. Does it look like the buyers are in control? Well, yes, it does. They're making higher swing lows. We've broken a swing high here. Can I say for certain that the buyers are 100% in control? Well, I would prefer to see the Geiger counter here in a green zone to show me that there's been some active buying going on. All right, well, there we go. We got filled. And let's see if we can do anything with this now. Remember, we're expecting the market, if the market is going to reverse, we're expecting it to retest the highs. Buyers and sellers are always retesting highs and lows. Yeah, like Rick says. So basic technical analysis. Yeah, in a sense, that's what it is. You're just trying to get a handle on who might be controlling the market. And after that, it becomes, can I afford the risk to take the trade? A lot of times people make the mistake, they'll take the signal and they'll throw their stop loss in right there below the signal bar or, below the last swing, and that's just a little bit too tight. Okay, so my Geiger counter is going red. So that's not what I want to see. So I'm probably going to bring my stops in here a little bit. Usually I like to stay at least 2 swings back. That would be swing 1. Somewhere around the hard edge here would be swing 2. So I can bring that up. Maybe now I'll bring my break even in a little bit. So if on the next push higher, I'll take the break even if the market flounders. Okay, so I got tagged at break even, and now I'll make a note in my trading journal. I'll watch the market for a few minutes here. Maybe I was too quick with the break even. Maybe I should have held out for a bigger retest of the high? More often than not, your biggest challenge as a trader is going to be determining trend. Because if you can determine that the market is in an uptrend, well, resistance means nothing because the market has to continue higher. Support means everything. And vice versa, obviously, in a downtrend. If you can determine that potentially the market is in a downtrend, then of course support means nothing and resistance means everything. So you watch the market go up and you watch it stall, and then it looks like it's starting to continue lower. Okay, then you're going to look for an opportunity. You're going to look for a signal to short. Okay, Rick has another good question here about why do you prefer the NASDAQ over the E-mini? All right, it's a great question. So here's the E-mini S&P now. And if you're following the E-mini, we have to go with our faster settings. So we go with the 446. So that means you're going to have a 4-tick brick. And then you're going to go to your indicator window. And you're going to highlight your Raptor 2.0. And then from here, we're going to pull down to our cloud sizes and our hawk bar. And we're going to make our hawk bar 4 ticks. One of our clouds 4 ticks and the other cloud 6 ticks. The reason is that the E-mini, unfortunately, is the only popular instrument that trades more than $10 a tick. And therefore, the default settings are not going to be responsive enough. So we go with the faster settings. Okay, so the deal now with the E-mini is, why would I trade the E-mini over the NASDAQ? After all, the E-mini is $12.50 a tick. The NASDAQ is only $5 a tick. If the E-mini moves 20 ticks, I've made $250. If the NASDAQ moves 20 ticks, I've only made $100. But is that what really happens? Well, in actual fact, no. What you're going to find is that while the NASDAQ and the E-mini move together, they don't move an equivalent tick amount. Rather, they tend to move an equivalent dollar amount. So, case in point, we're going to take a look at this area right here. We're from the pre-market swing low to this current swing high. So from here up to here is $575 on the E-mini. Let's see what it is on the NASDAQ. So from the swing low to the swing high, this one, I think the E-mini is gonna do better. Okay, from the swing low to the swing high, right there. Okay, not bad. $430. Usually they're a little bit closer than this, but this is close enough for comparison's sake. So technically, yes, you would have done a little bit better had you traded the E-mini. You would have made another $145 versus the NASDAQ. But here's the catcher. The NASDAQ is $5 a tick. The E-mini is $12.50 a tick. That means when you're setting up your trade to do your risk scenario, if we go with our risk percent mode, and let's say we're looking to take this signal right here And just for argument's sake, let's say we're going to cover the gap. So we're going to cover right down here. Oops, okay, a little bit too far. Let's say we're going to cover here to the primary resistance line, right on the number. There we go. Okay, so 315 is going to be the risk amount here on the NQ. I may have to adjust this because it's not going to make my point. And we're going to do the same here with the NQ. Yeah, it's not going to make my point. Very often what you're going to find happens is that because the NASDAQ is $5 a tick and the E-mini is $12.50 a tick, you can actually take 2 NASDAQ contracts for every E-mini contract. So whereas the profit amount is almost the same, there is the potential that with the NASDAQ you can trade 2 contracts, in which case you would be earning just over $800 trading the NASDAQ versus $500, $600 trading the E-mini. Plus it gives you the added advantage of 2 contracts are infinitely easier to manage than a single contract. Because a single contract you're always left with, do I take profit? Do I roll my stops? What do I do? Trading multiple contracts, you have the ability to lock in some profit, perhaps leave a runner in play. But yeah, a lot of people overlook the NASDAQ and the mini Dow because they think, oh, $5 a tick, I can't be bothered. And never realizing that there's potentially more profit in those smaller tick instruments. So if you've never given the NASDAQ a serious look, I would encourage you to check it out. A lot of traders like the Russell as well because they feel it's a professional's market, a purer market to trade. And the Russell is good. It does seem to trend well. The mid cap, the EMD, is also a very nice trending market. It also trades at $10 a tick. That's the S&P 400. But honestly, if you're looking for a reasonable amount of intraday volatility, some decent sized moves, then I think the NASDAQ is pretty tough to beat. That's always why I favored it anyway. All right, so let's take a look here now at the signals that we have going on here again. So it turns out that perhaps our trade here off that number 1 signal, taking the break even, was not a bad idea. The market making another quick reverse. And now it's starting to look like we're going a little bit sideways. We're still sideways to up, I guess. So I think what I would like to see here, well, the Geiger counter is fairly bullish at this point. I think what I would like to see here is evidence that the market is prepared to head lower. How can I tell that? Well, we're going to produce probably a number 2 signal here on the reverse, but how can I really tell the market is ready to head lower? It's when it's going to violate a significant swing. So you can either consider this point a significant swing point or perhaps even the low of the day a significant swing point. Why is that important? Well, because if the market violates a significant swing point, there is a good chance, a very good chance, that the market will make two moves in the direction of the breakout. The breakout is move number one. After that, we're going to see a little bit of a reaction, and then we're going to look for move number two. And that is where we're going to look for our signal, whether it be a number one, a number two, or a number three signal. Really doesn't matter. But we're just going to look for evidence that we've taken out a significant swing point, and now the market's going to try to continue in that direction. Now, you might be looking at this and saying, whoa, wait a minute, Eric, I have to wait that long to get a trade? Well, no, we're going to produce signals before that, but if you're looking for your highest probability opportunities, yeah, you're going to have to wait here for a little while, because the market may not be certain that it's really going to head lower. Now here too, you're going to see opportunities, and it's going to be left up to you to judge whether or not that's an opportunity you want to take advantage of. So for instance, so here's the highs. Here's another retest of the high. The next sell signal will be a number two signal. It will not necessarily print as a number two, because of course this retest of that high is really far removed, far enough away that it's going to fall outside the programming parameters, and yet visually you know that's what it is. We're watching the market try to recover the trend, and if they can't do it, well then we're going to produce a sell signal. So let's say, just for argument's sake, that we produce a sell signal right here. Now it becomes a logistics problem. First off, can I afford the trade? Because I'm going to have to cover the trade above the high. Yes, I can afford the trade. Is there potential here to manage the trade or to hit my profit objective before the trade runs into trouble? Yes, there is. Do I think this is one of the best opportunities I'm going to see today? Well, maybe not, but you know, if you think you can afford the risk, then go ahead, take the trade. That's really the defining feature. But right now, it looks like the buyer's still making a decent rally. We're heading back here now to the high of the morning. And we had one of these discretionary signals pop up after our number three signal. So here now the breakout from the buyers. Let's see what they got. We've broken a significant swing high, so once again we should anticipate another move in the direction of the breakout. Now when you're using this characteristic of the marketplace, remember it has to be a significant swing high. What makes for a significant swing? Well, again, unfortunately, that's a little bit subjective, but you have to find this, of course, the daily chart now. But, you know, here, for instance, this was a significant swing point. So market made a strong breakout, retested. There was move number two, right? There's move number one, there's move number two. There's a significant swing right there. There's move number one. And arguably either this one or this one was move number two. Then they broke the other way again. There's move number one, there's move number two, and so on they go. Usually the second move has a little bit more follow through to it. But even on these short ones, even if you know you were able to get in off one of these, there was still plenty of room to profit in that, even though the market did not head much lower from there. like I say, your biggest challenge as a trader will be determining trend. Very often what I'll do is, if I've had a profitable trade, I will stay with that direction. And if I've had a losing trade, well, then I'm going to look at taking a trade in the opposite direction. So by that logic, this morning, my sell signal worked out, the one that we took in the hawk there. And so I may favor short signals today. But you shouldn't get, too committed to that. Rick is asking, my chart isn't showing your green resistance line. What am I missing? Hold on a second here. That's another one of these little add-ons that we have. One sec. Okay, that's the initial balance lines. Ooh, I forgot we even have a moon phase indicator for the GAN traders. Okay, the initial balance lines, what it does is, well, it offers several different lines that you can highlight. What I've done, though, is just highlight the opening range. So there's my opening range lines, and then there's other lines that you can also highlight, which I don't focus on very much. But opening range is traditionally that first half hour of trading. And sometimes it's helpful to see the highs and the lows of the opening range, as a lot of traders believe that the commercial interests kind of get busy early and they get all their business done in that first half hour. I don't know if that's really as true as it used to be, but it is interesting how often the highs and lows of opening range will tend to be rather significant. All right, let's put that away. The other thing, when you're trading and you're not sure about a trade, you may choose to wait on the trade, and then you're going to watch the market run away without you, and you're going to be upset. Don't be. We all miss moves. I've been watching the market for a while. I miss plenty of moves. You just have to get to the point that when you do take a trade, that you can be reasonably confident that the market's going to at least find your profit objectives. Another tool that will really shorten your learning curve is if you keep a handwritten trading journal. I know you're thinking, oh no, not journaling. Yeah, journaling. And here, for the benefit, I really need to update this photo because this is from a few years ago now. But let me show you a copy of a page from my trading journal. This is from about, I guess, well, about 6 years ago now. Grab yourself a spiral notebook or whatever, just so long as it's something to write on. You can keep a computer journal as well, but you're going to find that just the simple act of writing something down is going to imprint it better on your memory. And you're going to develop your own shorthand. but these are the essentials that you want to record. You want to record the time. You want to record whether you're buying or selling. You want to record the bird that you're using. If you're just trading the Raptor, then you probably don't need to worry about that. The instrument, your entry, your stop loss. I now record my profit objective as well. Obviously, how the trade worked out, but then most importantly, what were your reasons for taking the trade? You should always have two reasons for taking a trade. If you can find two reasons to take a trade, then you're probably looking at a pretty decent trade. If the trade does not work out, then try to see what you did wrong. So you see these two losing trades here. This is how I came to recognize that around the quarter to the hour mark is not a very favorable time for me to be trading. People will ask me, how did you come up with that? Don't trade at the 645 mark or the 945 mark in the East. Because I kept sucking up a couple of losing trades. But what I tend to do is I tend to highlight what I've learned from the losing trade with a big star. And then you can see after that, got some very profitable signals. And this is also how we got strategies like the second push entry, the first micro macro cross on the hawk, and so on. You will develop your own shorthand, but like I said, the most important things to record are your trade parameters, of course, but the reasons you took the trade, and then if the trade did not work out, what did you learn from the trade? I guarantee you that within 2 weeks of journaling your trades, you will start to see a pattern develop, both good and bad. You will start to spot things that work for you, and you're going to start spotting mistakes that you tend to make consistently. I never review my trading journal. I know there's people that review their trading journals, but the only reason I ever review my journal is just to check it against accounts or to tally, do a quick tally on the month, how many trades, how profitable I am or unprofitable I am. But the simple act of writing something down, it imprints on your memory. And it's kind of like in school. Remember when they made you stand at the chalkboard and write out, I will not do whatever it is I did 100 times on the chalkboard? That was to imprint something on your memory. And this is kind of the same. Okay, Rick is asking, what about 23 plus years experience on the merits of trading with the open? TP, TP, is that supposed to be a profit target, Rick? Oh, take profit. Yeah, okay, thanks. What about 23 years plus experience on the merits of trading with the open? Target on profit, finger on the close button, or all your trades preset with target on profit and stop loss no matter what? Very often you will see me try to trail a stop, try to run out a trade early. My logic behind that is if the market's going to make a move, it's going to tend to make that move earlier in the day. There will be a little bit of a flurry going into the close on most days, but usually the market is going to make some sort of move the first hour of the day. So when I see a promising signal, let's say, the market's making a little bit of a higher swing here. I got a number 3 signal. Where's my number 3? There it is. There's my number 3 signal, and I'm looking, and okay, I've got some room here before the high of the day. And if there's a chance that I can take more than one contract, well, even if I can't, I'll probably try to run it out looking for something like this, looking for a little bit of an extended move. That's usually my strategy. Sometimes it works, sometimes it doesn't. A lot of times, and I do mean a lot of times, I would have done better had I just taken profit on target. In some ways, taking profit on target is more difficult because you end up looking at a trade like this and you take it, you say, oh, I got my $100, sure, but look, I could be up, I'm pushing like $250, $300 profit on this trade. Well, yes, you are, but most times, about 75% of the time, the market will hit your profit objective and then reverse at least enough to tag you out at around a break-even stop out. Again, from my journaling, I know that days that have been mediocre days, I will have at least 3 stop outs that would have hit profit objectives. So right there's $300 that I could have had I taken profit on target. I always encourage the smaller account traders to take profit when you have it. When you start to trade a larger account, then of course you have the luxury of perhaps leaving a runner in play just to see what will happen. But no, I think you can try it for yourself, but I think you're going to find that most times you're going to do much better taking your profit when you have it. And I know you don't usually see me do that in the trading room, and sometimes I'll look like a rock star because I'll catch a big move, but more often than not, I would have done better just going in and out of the trade. Yeah, Mark had the I will not chew gum in class 50 times on the chalkboard. Never did that again. No, that's torture for a kid, having to stand in one spot and just write that out. All right, well, we've had a very nice little run up here this morning. Here's another little fun fact about a market, if you want to call it that. It's a market characteristic. I think we can safely say the market is in an uptrend today. I think a lot of traders are looking at this market and saying, this market's in an uptrend today. So what does that mean? That means there's going to be buyers looking for an excuse to buy. And they'll look at all kinds of excuses. They'll look at a retest of the high of the morning. They'll look for any down bar. This is when stock traders get involved in in trading because, well, they have to short on an uptick, they'll look to buy on the downtick. So they'll look for any bar that finishes bearish as an excuse to buy. Um, yeah, they'll look for any kind of pullback, any kind of, and see, so here we have a pullback. There will be traders right now who have thrown a buy order in up there, and then they'll bring it down here off that bar. And you can see we've already got the warning dot. There will be limit orders down here waiting for the market to come back and retest. There will be limit orders down here for traders who think the market's going to come lower. But honestly, they will, now that the market is in an uptrend, they will look for any excuse to get into this market. Personally, I like to wait for a signal to develop, but there's not much else going on right now, so we'll just see how it plays out. Geiger counter needle here is pretty bearish, so I think we could anticipate a little bit more of a pullback. Some will be looking for any kind of support, so the next bullish bar they'll be looking to buy. That's another popular way to get into the market. The challenge, the challenge is not really getting in. The challenge is finding the right way to get in. But again, if you can identify a trend, then the rest of it kind of becomes secondary. Can I afford the trade? Is there room here to profit or at least manage my trade? Well, they're not giving me a chance to demonstrate this very well here today. The market kind of slow. The challenge with buying up here is not that it's necessarily a bad idea, but covering the position, right? You pretty much have to cover it, well, at least to the hard edge. And maybe deeper than that still. All right, so you can see they would have bought in here, those early buyers. And so far they're not doing too bad. And this is based on nothing more than trying to get in the market with trend. All right, well, the trend's still plodding along here. Um, Mickey asking a good question, and thank you, folks, for your questions. I'll do my best to answer. I don't have all the answers, but I'll do my best to answer. Um, and when the market's quiet like this, it certainly helps pass the time a little. Mickey asks, what does it mean to you that the market is staying above the initial balance high? So Mickey's watching volume profile or market profile, try to give him a clue. Anytime, the whole idea of the balance lines and the value area highs and lows is that you kind of identify points where the market is either in balance or out of balance. I think that the fact that it's above the initial balance high tells me that the market's going to be a little bit more bullish today. We kind of do a similar thing here with the support and resistance suite. They're not initial balance lines, but they kind of tell us the same thing. When the market is above the median line and certainly above the primary resistance, I think we can anticipate the market to be more bullish, and vice versa. If it's below the median line and especially below the primary support, we can probably anticipate the market to be a little bit more bearish. It's important to remember, however, that all those things you have on your chart are not really there. The support and resistance lines are not really there. The hard edge of the Raptor is not really there. The trend line here on the Falcon, not really there. The cloud on the Eagle, not really there. These are all tools that we use to help us identify what the market may do next. So there's the temptation to over tweak, thinking that the objective of trading is to figure out trading, if that makes sense. To perfect your trading system. That is not the objective of trading. And yet it's a rabbit hole that so many traders run down. Again, they're just tools and they're just there to help you try to get a handle on what's going on, but always default to to what's happening on the chart itself. Oh, I see. Sorry, Mickey. I misunderstood. Mickey says I'm watching the initial balance on the initial balance lines. All right, well, let's see here if I can turn mine on. I've never really looked at the initial balance line. I don't know how to turn it on. Okay, well, I won't worry about it right now. Yes, I know the initial balance line will plot a line there as well. Oh, I see. Okay, Mickey says above the high of the day here, above my opening high. Um, yeah, the market definitely seems a little bit more bullish. My opening range was fairly tight. You know, it's only from 75.17 to 75.44, so 30 points, 120 ticks. That's not very broad for an opening range. But yeah, I think we've definitely got a bullish flavor on the day here today. Rick adds, it's true we only trade our perception of the market, and the right edge has an illimitable uncertainty. But what is the objective of trading? You left the teaser out there. Oh, sorry. The objective of trading, of course, is to make money. That's why we sit here and we watch the charts go by, trying to find that ideal opportunity that we're prepared to risk our hard-earned money on. So now that it seems as though they're slowing a little bit, what I would be, and our trading band is getting a little bit broad, I might be on the lookout now for a possible reverse. Not a big reverse, but the wider the band gets here, the more likely I can take advantage of a little counter trend move. Now, I don't have a signal here, but I'm just showing you this. See where my profit target is relative to even the high of the morning or even the hard edge of the trading band. That's not asking a whole lot for the market to reach that profit objective, which might make a counter trend trade actually fairly favorable. But first, I have to see that the buyers cannot move the market higher, at least not for the short term. So that means a retest of the high and a number two signal to develop, a sell signal to develop. Okay, so here's the retest now. Here yet another buy signal. And of course that's with trend. This would be one of those discretionary signals. It did not come back into the hard edge yet, which would have made for perhaps a more predictable buy. And we'll see now if we come back with a failure, that may give us a chance to short. All right, so a little bit of a retest. Now this is going to be a chance, a risky trade, right? Where I'm going to be flying into the face of a reasonably strong uptrend. Okay, the Geiger counter is getting a little bit more bearish. I'm going to lock myself in manual mode, and I'm going to get ready here to short the next signal and hope that it will get down to my profit objective. There's the signal, so I'm going to sell it. Stops go above the high. That's the only good thing about a counter trend trade is you always know where your stops need to go. And now I'm just looking for a little short-term move. The big target, of course, the hard edge of the trading band. I'm just looking for a little modest pullback. There's even potential that the market will move back down here to the 75, 34, 35 area, which was the kind of the sideways trading range where the market made the earlier breakout. Okay, they're trying. They're almost down to the break even. And what I could do is I could bring my break even up a little bit. So the next push at the low will bring the trade to break even. All right, so got to break even. Looks like we trapped a few buyers out of their positions and okay. finally got to that profit target. Okay, a couple questions here from Rick. Rick asked, what did you do to go into manual mode? And can you remove the limit out to allow for a manual close, or will you get slipped ugly market order pricing on that approach? Okay, first, the manual mode. It's not a very obvious button, but if you click on your risk percent, you will see it toggles between manual and risk percent mode. When it's in manual mode, this box will become active, and then you can select how many contracts you want to trade. Usually, well, for me, I just leave it on a single contract. Your buy and sell buttons will always default to this value right here. Whether you're in manual mode, oh no, sorry, you have to be in manual mode. If you're in risk percent mode, your buy and sell buttons will default to whatever your risk percentage is relative to your automated stop. Now, regarding the profit target, if you just wanted to have a runner in play, you see how I have target 1 here, 100% at 20 ticks. If you dial that down to 0, now you will no longer have a profit objective. So watch what happens. I'm in manual mode, 1 contract, I hit my sell button, I no longer have a profit target in play. All right. Regarding getting slipped out, if you close your trade manually, no, the NASDAQ is usually liquid enough. There's enough volume there that slippage isn't usually an issue. Although through the summer here, I think the worst slip I got one day was 4 ticks, but that's unusual. Sometimes you'll get slipped a tick or two. You can also use your stop limit order, which will contain your slippage a little bit. Okay, another little retest. Yeah, I don't know at this point. See, this point is always a curiosity to me because I don't know whether the market is trying to establish a bit more of a downtrend or if this is nothing more than a bear flag forming and we're going to see another bullish push higher. This setup is always a little bit of a puzzle. Well, Geiger counter is getting, or was a little bit red, probably based on that little selling spike that went through there. The trend is still up, though. don't want to get too cute with those counter trend signals. Well, we might be getting another bearish push with this, a possible 2-3-2 type setup. So here's the 2, here's the 3. If we come back with another number 2 signal, that tends to have a little bit more bearish follow through, because again, we're watching the buyers trying to rally the market unsuccessfully. All right, so you can keep a lookout for that possible short signal. Mickey's asking about the auto stop. You mentioned the auto stop when answering the last question. Where's the auto stop parameter? Well, if you have a stop strategy enabled and you hit your buy or sell buttons and you are in risk percent mode, the trade manager will use that value to calculate your risk percent on the trade. If you go to your strategy window and you find your trade manager and you roll to the very top, you're going to see this parameter called invalid stop ticks. What that does is it sets your stop when you are against your stop strategy. So for instance, by default, yours will say 10. I think you should change it to something higher than that. 30, 40, 50, whatever it is, because these are ticks. Okay, so here's your sell signal. So let's say I had my stop enabled this way and I want to sell. Well, obviously I don't want my stop right here, right? I want my stop up here. So this is an invalid stop. So therefore I get my stop now 30 ticks away, because that is my invalid stop entry. Now note, the trade manager, based on that 30 tick stop, gave me 3 contracts because I'm in risk percent mode, and that is 2% of my capital right there. To make those changes to your stop strategy, so again, you go to your strategies window, you have to first make sure that your trade manager is turned off. So you go to your enabled, you turn it off, remember to apply. Don't do this while you're in an active trade, by the way. And then you can change this value. Now, you may want to make it more than 30 ticks because once the trade goes live, you can adjust your stops, right? Even if it starts off at 50 ticks away, you can always bring it in tighter. But at 10 ticks, you're going to be right in the action. You're going to be right where the market is trading. So at 10 ticks, you're only 2.5 points away. If the market is very, very active, you're not going to have time to get your stops out of the way, which is why you need to go with a higher value there. So once you make your changes, you may want to save it as a template. You know, if you already have a template made, if not, just give it a name, press enter, and then you will have a template. Then remember to turn your trade manager back on and click apply. And now you will have a 30 tick stop in play when you hit your buy and sell buttons. And like I said, you can make it more or less because the idea is you just don't want it so tight to the market that you get stopped out before you can grab it and actually put it where you want it to be. All right, here we're getting a little bit of a bullish pushback. Of course, from the hard edge, buyers are going to be interested in buying. This is where they bought before. Sellers held the highs here around the 75, 63, 64 area. Yeah, Rick asks, Eric, so I understand what you just articulated was stop parameters when the trade manager is in manual mode. Yes. Or if it's against your selected strategy. Like right now, from the preview, you can see if I went with the ATR stops and I tried to sell, well, my stops are below. My stops are below. I need my stops above. That's why the invalid stop, because it's not valid. See, and I usually counter trend, or even with my buy sell buttons, I will normally switch to manual mode just so I can control my position size a little better. Chopping about a bit again. Come on. We're bullish, but we're still producing some warning dots, some sell warning dots. We do need to see the sellers step up here soon, though, or the buyers are going to retest the highs, and that would not be good. Nope. See, the hard edge is going to overwhelm the market here. They're making a run, and they're probably going to get tagged out on this. The evils of counter trend trading. All right, a little bit of selling going into the market now. No, here they come again. So probably going to get tagged out on this, but I am going to try to nurse this trade at least to a break even. No, ain't going to happen. All right, boys and girls, I'm going to wrap up shop here for the morning. And if you're going to continue trading today, I think we may have seen the move of the day. I think we can anticipate the market to kind of flip-flop here back and forth a little bit. I might try another short. I know I just got tagged out on that one, but we'll see. We'll see whether or not they can have any more follow through to the short side, as they may establish a little bit of a sideways trading range. All right, I will see you again tomorrow. We'll talk to you then. Bye for now.